So now we will start with the cash flow statement from this balance sheet and profit and loss account. Okay, I will reduce the size of column G, and in each column I will write cash flow statement for 2017 for 2017 particulars and rupees. Follow me perfectly. Particulars and rupees. Heading I will make merge center bold color coded. Particulars and rupees also center and bold. Center and bold. Now tell me, what are the three major components of cash flow statement? What are the three major components of cash flow statement?
Operating,
Operational.
financial, investment.
Cash flow from operating activities, cash flow from investing activities, and cash flow from financing. Okay, so what we will do is we will give headings. First, A, write CF from operating activities. That is cash flow from operating activities. Around 10 lines I want for this. So I can Control C, Control V this after around 10 lines. And rename this as B, cash flow from investing activities. Investing activities around 4 lines I want, so I will put around 4 lines and put it here. C, which is cash flow from financing activities. Financing activities. And rest space we will keep for financing activities. You can make the borders visible up to few lines after cash flow from financing activities. So this our cash flow is properly built in. I will make the headings bold. I'll make the headings bold, increase the size of column H. Is your cash flow statement ready?
Ready, sir.
So what is D point, sir?
Point C. There is no D. There is point C, cash flow from financing activity.
Okay.
Yeah. So let's start. Always you can remember this. The starting point is profit and loss account or retained earning. We can write P&L or retained earning. We have to take the difference. We have to take the difference. Understand, look at balance sheet. Look at balance sheet. The first item I'm taking is retained earning. I will color code this with the different color, reserves and surplus. If you have profit and loss account here, you will take profit and loss account. But now you don't have P&L, you have reserves and surplus. So you can take the difference between these two years, these 2 years. So while you are into the liability, can you see the calculator on the screen now?
Yes, sir.
Yeah.
Yes.
Correct. So you will calculate second year minus first year. Let's connect it here. You can write is equal to, if required, we'll use calculator, but now not now here, is equal to, give the second year sale minus first year, second year minus first year. So this is your net retained earning. Net retained earning of 2017. It is a starting point of your cash flow from operating activity. Cash flow from operating activity. Okay, then we will start now with each item from balance sheet. So have you written cash flow from operating activity? First item, retained earning difference,
Sir, repeat now.
1,67,000. Okay, I'll repeat that, is equal to second year retained earning minus first year retained earning. Second year retained earning minus first year retained earning. Now, as I take each item from the balance sheet and profit and loss account one by one, I will color code it and take it into cash flow statement. Color code it and take it into cash flow statement. Okay, so let's start with share capital. Share capital. I color code it. We are dealing with the share capital now. 5 lakh becomes 6 lakhs. So there is an increase in share capital from 2016 to 17, which is cash inflow. Cash inflow. But that is cash flow from financing activity because it is increase in share capital. So what you can go to point number C here in cash flow statement and write issue of share capital, come to the amount cell and type is equal to second year share capital minus first year share capital. Second year share capital minus first year share capital. Now you can see here issue of share capital. Share capital increased means there is an inflow and that is denoted by a positive figure 1 lakh in cash flow statement. Positive figure 1 lakh in a cash flow statement. So share capital issue is a issue of share capital is a cash flow from financing activity. Cash inflow from financing activity. Next is long-term loans. Long-term loans. 3,20,000 becomes 2,90,000 means long-term loan repaid. Long-term loan repaid. It is cash outflow. Again from financing activity. Again from financing activity. Go to cash flow financing activity and write long-term loan repaid. Long-term loan repaid is equal to second year long-term loan minus first year long-term loan. Repaid means cash outflow. Cash outflow. So you can see here correctly it is coming minus figure minus 30,000. Minus 30,000. So we are done with the long-term loan from the liability side. The only item remaining from liability side is what?
Creditors.
Creditors.
Creditors. Where will you take creditors? in operating activity, creditors, because it's a operating liability, operating current liability, you will always take from operating activities, increase in creditors. Increase in creditors is cash inflow. Increase in creditors is cash inflow. Means you have not paid it, so obviously it is cash remaining with you, that is cash inflow. Second year minus first year. Second year minus first year, so difference is cash inflow 13,846. 13,846. So your increase in creditors is also done. Balance sheet liability side is already done. Now we'll come to the asset side. Asset side, gross fixed assets, 8 lakh 40, 8 lakh 90. So there is an increase by 50,000, which is purchase of fixed assets. Purchase of fixed assets, which is investing activity. Point number B in cash flow statement. In that you write, in investing activity you write purchase of fixed assets. Purchase of fixed assets is equal to when you are on the asset side, you have to take year 1 minus year 2. You have to take year 1 minus year 2. When you are into liability side, you have to take year 2 minus year 1. Why? I will tell you now. Purchase of fixed assets, you take year 1 minus year 2. Year 1 minus year 2, which is minus 50,000. Minus 50,000. You can see here, purchase of fixed assets is a cash outflow. When you take year 1 minus year 2, you will get outflow. Okay, and if it is reduced, you will get inflow. You will get inflow. So it will be correctly adjusted. I repeat, while building a cash flow in Excel here, your liability side you can take year 2 minus year 1. On asset side you can take year 1 minus year 2. Okay, so we are done with the fixed assets. Now second is accumulated depreciation. Accumulated depreciation. Accumulated depreciation is depreciation 90,000 in year 1, 190 in year 2. Okay, but primarily we take this because it is a profit and loss account item. You can see here I have highlighted this in profit and loss. 1 lakh rupees we have debited in P&L, which is a non-cash expense. Non-cash expense, and that is why we have to add it back into operating activity. So you can come to the operating activity and write depreciation. Instead of taking it from balance sheet, you can connect it to profit and loss account here. The difference is same, but you will take it into profit and loss account. From profit and loss account, 1 lakh. 1 lakh. We have to add it back into cash flow from operating activity because it is non-cash expense. Non-cash expense.
Sir, how the difference is same? Actually, you said that in asset side, we have to minus the first year minus second year, not the other way around. So if you minus 90,000 by 1 lakh 90,000, we get minus 1 lakh, sir. And in the profit and loss account, depreciation is directly written as 1 lakh. So how you say the difference is same?
I will tell you. You are correct. Understand what I said. When you are on the asset side, you take it year 1 minus year 2. Correct?
Yes.
Okay. But Swapnil, you can understand here, accumulated depreciation is minus from asset side. Minus from asset side is like a liability side item. is like a liability side item. Is it added into the asset accumulated depreciation? Are you getting it? Accumulated depreciation is not added. It is minus from asset side, correct?
Got it, sir.
Got it? That is why we have, yeah, that is why we have taken this. Actually, it is like a liability side item. So you can take either second year minus first year, or you can directly take it from profit and loss account.
Okay.
Yeah.
Thank you.
So we are done with the accumulated depreciation also. Net fixed asset you don't have to touch. We have already taken it from gross fixed assets. Long-term investment. Next item is long-term investment. Long-term investment 0 and 140. So this is purchase of long-term investment, which is investing activity. Investing activity. You can take it into investing. Purchase of long-term investment is equal to year 1 minus year 2. Year 1 minus year 2. Again outflow. Because money is going out. Cash is going out when you are purchasing investment. When you are purchasing investment. Next, inventory. Inventory. 80,000 become 1,01,667. Increase in inventory means money is blocked into inventory. Cash outflow. Outflow. That also in operating activity. Operating activity. You will write increase in inventory. Increase in inventory is equal to year 1 minus year 2. Year 1 minus year 2. You can see now you're getting a minus figure, which is outflow. Which is outflow. Debtors. Debtors, again increase in debtors. You write in operating activity only. Increase in debtors. Increase in debtors is equal to year 1 minus year 2. Again minus 2,08,22. 2,08,22. Increase in debtors. And cash and bank is still remaining. This is the main thing for which we are doing all these things. So I will color code it differently. I want cash and bank here. Closing balance from cash flow statement. So balance sheet items are over. Let's look into P&L. Let's look into P&L. Sales are correct hai. Sales, because sales are operating revenue. So that is correct. Now you can see income from investment. Income from investment. While you arrive at the profit of this year, income from investment is added here. Income from investment is added here. Are you agreeing with this?
Yes, sir.
Okay. So what I want is income from investment is added here, means it is considered in operating activity, because profit is taken in operating activity uh, under the name retained earning difference. Retained earning difference. So your income from investment has come here, but that's not income from operating activity. That is income from investing activity. So what I should do is I should minus income from other investment from operating activity and add in investing activity. Add in investing activity. So you can write operating activity, come to cash flow from operating activity and write income from investment. Income from investment. I want to minus it. I want to minus it from operating activity. So I will write is equal to, press minus sign, press minus sign, and then take that 15,000 cell, which is F5. 15,000 cell is F5. Enter. So what I did is here, income from investment I have minus from or deducted from operating activity. Operating activity. But the same thing I have to add in investing activity. So I will go to point number B, cash flow from investing activity, and add income from investment is equal to, give this 15,000 cell, now positive. Now positive. Now positive. So actually I have not done anything. I have just added once, deducted once, but I want to make it clear that it is not operating cash flow, it is investing cash flow. So I deducted from operating and added in investing. Added in investing. Okay. So here I am done with this income from investment. Income from investment. Come to the other items on profit and loss account. Further, material is over, material is correct, salaries, wages, power and fuel, other expenses correct, depreciation is done. You can see interest paid. Interest paid. I have deducted from profit and loss account, but that's not an operating expense as far as cash flow is concerned. That is financing expense. Financing expense. So what I will do is I will add back interest in operating activity and less from financing activity. Same thing. Add it once, minus it once. So we will do that. So go to operating activity and write interest on borrowings. Interest on borrowings. We have to add it here. So positive is equal to 24,000 sale. Enter. 24,000 sale. Enter. And then go to cash flow from financing activity and write interest on borrowings. Here it is a expense. So is equal to minus sign 24,000 sale. Enter. So this becomes minus 24,000. Minus 24,000. Minus 24,000. So I have adjusted this also, interest on borrowing. Come down in P&L. Come down in P&L. NPBT is okay, tax is okay, NPAT is okay, dividend. Come to dividend. Now if you see dividend, dividend is also deducted from operating activity while arriving at profit. But that's not operating, that is financing expense. So what I will do, again same thing like interest on borrowing. I will add back dividend in operating and minus from financing. So I will write operating activity. I'll go to operating activity and I will write dividend. Dividend. I will add it here, positive 50,000. Take it from P&L, don't type. Positive 50,000. I'll go to financing activity and write dividend paid. Dividend paid. And now here I will write it minus. Minus sign 50,000. Enter. 50,000. Enter. 50,000. Enter. Now all things are done. All things are done. Now let's start making the totals of cash flow. So I will name it as CFOA, that is cash flow from operating activity. In bracket I will name it as A. Name it as A. Is equal to sum. Take all the figures from retained earning to dividend. Bracket closed. So I'm getting a sum 1,18,057. I will make it bold and color coded. Make it bold and color coded. Then I will have CFIA, that is income from investment, cash flow from investing activities. I'll call it as B and make the sum. Again, bold and color coded. Then CFFA C. Again, I'll make the sum. I want 3 more lines, so I can 3 or 4 more lines. I can make the borders visible. I'll make CFFA capital, bold and color coded. So A is operating activity, B is investing activity, and C is financing activity. Now A, B, C, we will make the total, that is net cash flow. Net cash flow is A plus B plus C. Net cash flow is A plus B plus C. So take A, that is I13, plus B, that is I19, plus C. What happened? I'll do it again. Is equal to A plus B plus C, enter. So your net cash flow is minus 60,943. Add opening cash and bank balance. Where will you get opening cash and bank balance? You will get from balance sheet. You will get it from balance sheet of 2016. So you will press is equal to, take 70,000, enter. That will give you closing cash and bank balance. Closing is equal to net cash flow minus opening, not minus, plus opening, is equal to net cash flow plus opening. Net cash flow plus opening. So you got a final figure, closing cash and bank balance is equal to 9,057. 9,057. And simply bring it to balance sheet. Is equal to closing cash balance, enter. Closing cash balance, enter. And now you can see your balance sheet is tallied at, balance sheet of 2017 is tallied at 12,51,546. Both the side total is same. So you have brought cash from cash closing balance from cash flow statement to arrive at a tallied balance sheet. Arrived at a tallied balance sheet.